Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES continued to push to fresh all-time highs, and at this point, the buy side is in control on multiple time frames, so we do have a certain amount of time frame alignment heading into the open. On the upside, we have resistance at 2201 to 2203, and that's really just built off the overnight session, so it's not really a strong area of resistance. On the downside, we have yesterday's high at 96.5. Holding above that would be a sign of strength. And below that, we have support at 90 quarter to 92 quarter and the gap at 93. And that's an area where buyers can be active. And given that we do have that time frame alignment, responsive buyers can really step in at pretty much every zone on the way down. So the only time that it would make sense to be conservative on the long side is if we were seeing excess weakness on the day time frame and just much more weakness than expected, where the AD line was completely trending lower, the tick was completely holding below zero and printing some pretty decent values. In that case, of course, we have to take the real-time signals into account, but larger time frame bias continues to be bullish. Short term, the market is making fresh all-time highs, so right now we have to give more weight to the buy side and be much more conservative and cautious on taking any short setups because there isn't really any major resistance up here. The market's making fresh highs and it can continue to do so. So even in the event of a pullback, buyers can step in at 90 quarter to 92 quarter. In the event of a deeper retracement, buyers can step in at 83 half to 86. And finally, the 76 half to 79 half is going to be the area where responsive buyers can be active. But ideally, if the market is truly strong, it holds above 90 quarter to 92 quarter. So given the strength that we've seen here in the overnight session, ideally we don't get too deep of a retracement. But 90 quarter, 92 quarter wouldn't be that big of a deal. 83 half to 86, the breakout can still remain intact. A break below that, things start to get a little more neutral, but 76 half to 79 half would still be a very decent area of support that can cap the downside, and the buy side can then step right back in. So today our focus is going to continue to be more on long setups. We're going to be cautious and conservative on any short setups because there isn't really any very ideal location that we can lean on up here. Like I said, 2201 to 03 is built purely off the overnight session, and beyond that, there's not even any reference point. So 06 half and 12 to 14 on the upside are just areas where we could be testing the range a bit, and we're probably not going to go beyond 2212 to 2214 simply because of the fact that it's a holiday week and we're running on below average volume. So more than likely the range is going to start to get exhausted as the market pushes higher, and for that reason we don't have to go significantly above 03. Although we could technically head higher, there's not any hard resistance, but given the light volume, we're probably not going to go anywhere beyond 12 to 14 on the upside, and we might even struggle to really go much beyond the 2206 to 2207 area. So right now we do have that directionality to the upside. We do have time frame alignment on the long side, but the reward potential is questionable beyond 2206, 2207. So we just need to be aware of that idea that we do need to get a good enough entry where we still have sufficient reward to risk in our favor. So on the downside, 90 quarter, 92 quarter, first test, there's still going to be enough reward potential there because the market could retrace back up towards 2200. In the event of a pullback to 83 half, 86, again, there's going to be sufficient reward potential off that zone, even if the market simply just bounces back up towards the 93 to 96 area. Off of 83 half to 86, you still have sufficient reward to risk to justify testing along there. So that's really the game plan for today. More focus on the long side, cautious on shorts, unless we're seeing excess weakness on the day time frame and just very clear cut signs that tell us that the overnight high could stick. So let's see where the buy side steps in. If the market is very strong, even 96.5 could hold, and ideally we want to see it holding above 90 quarter to 92 quarter. So those are the main ideas heading into the open. Let's see if the buy side can continue to be active in the market, and we'll take it from there.